We are here, we are here, we are here on this amazing day. Okay, everyone, this is Cam Jones, FX Daily Analysis, and we are marking up TSLA. We are on the 12-month time frame. Price action, last candle to the right-hand side is a bullish green candle. Current price is sitting at 188.87. Let's take a look at what's going on in the market. Price action is a bullish green candle. It's trying to work its way up through that second last candle in the market. So that's the primary candle we're working with. So we're going to grab that second last candle towards the body, looking for that green and red side by side. So we're looking for price to head up to the numbers of 353.19. Price action comes down, it can tag that bottom of that price action support of that body and the second last candle bottom of that body near the numbers of 123.97. And we're going to gauge the top of that price action second last candle body to the bottom of that body and create a midpoint in the middle. So that will be near the numbers of 246.80. And we're also going to take a zone. We're going to place it around that midpoint. And let's read the market to see what happened. So we can see that the market started off at a low, consolidated sideways. So that means that it was a pattern created at the bottom that pushed that market up. So let's say it was a W. So we have that first, second, third, and then market pushed up for that W formation. Okay, market spiked up to a high, which broke the midpoint, came back to retest, and then now we're going to see if that market's going to push back up to the falling resistance. If not, then price action can be rejected at the below the midpoint level. So that means that price action touching that zone area and it can work its way down. But go back to that market's going up. So if it's going up, coming down in red will be the first leg, and then price action is the second leg. So we are on that second leg of that W formation if that market pushes up further. If price action pushes down, where is it coming from? You're paying attention to the structure of green and red at the high. So market pushed up once, market pushed up twice. So altogether, that's identified as a double top. So market pushed up twice. So we're going to draw out that double top. Market came down with the second last candle, came back to retest. And if it doesn't push up further, if it drops down from this midpoint, that means it can follow up the bearish red candle. Market's coming from a double top and a retest, and the market push down. But before market pushes down all the way down, it can head down to the numbers of 123.97, and we're going to see if it's going to break that following area. Anything within the range of 246.80 and 123.97, which will be the midpoint of the bottom half of the second last candle of the market, is all consolidation. So this market is consolidating at the low area until that pattern's formed, broke up to the midpoint, or broke down through that support of the second last candle body. Working our way to the 6-month time frame. So price action 6-month time frame is reading as a bullish green candle. So when we read in the market, let's say that market pushes up, where is it coming from? So we do know that market broke that midpoint while pushing up. So we have a break, we have the retest, and we're looking for that market to push up further. Price action already tagged the zone, so we're still waiting around to see what's going on. Also, we can see price action body is not above the previous body. Price action wick is not above the previous wick. So there's a pattern going on in there. So if you connect the resistance, it's coming down with the downtrend, and then the connect the body is coming down as well. So it's some type of wedge pattern, a decline wedge pattern that's happening in that area. We'll see if we can identify it as you walk down the time frame. Working our way to the 3-month time frame. So price action 3-month time frame. Last candle in the market is reading as a bearish red candle, spiked down to a low doji style candle, weak candle. So what this market is reading with this candle is that it came back to retest the second to last candle, and third to last candle, primarily second last candle midpoint. Okay, so if that market's work its way up, where is it coming from? So once that market broke that midpoint line and we receive the break, the retest, that will be identified as the first leg, second last candle, and the market is the second leg. Price action is a retest, and we're going to see if we're going to push up with a bullish green candle to push that market up into that zone, and so we'll see a double bottom. But if it's rejected and it works its way down from that zone, we'll talk about that on the monthly time frame. If it's rejected, you're just looking towards the high to see what happened at that structure. So towards the high, we do know we have what? Red and green towards the high. So we have that pattern structure of that first leg, second leg, third leg, fourth leg. So we have a double top. Market came back to retest that double top. One push, retest, second push. But the second push down only made it to the midpoint. So that means it's respecting the midpoint of the last candle of the market, or I say sixth to the last candle of the market, is respecting that midpoint. And if it's work his way up, we're looking for price action candle to engulf the previous candle to push that market up, and we'll see that first, second, third, and the market pushes up to that midpoint area. So where current price is at is that we had a high, mid, low, and we can see price actions hanging around where the second level lows of that area. So we're going to see if it's going to break up, break down, or just continue to consolidate side by side as we see with the price second, third, and some of that fourth to last candle. So primarily looking for price to break out of the sixth to last candle of the market, and that will be near that SR line to push that market up to the overall midpoint. Working our way down to the weekly time frame. So price action weekly time frame is reading as a bullish green candle. So we can see that we are receiving that break of that SR line. So let's go back and read the market. So in this area, we have a single bottom, and the market broke up to another level. And then we have first, second, third, and we're going to see if that market's going to break out and create that W formation. W formation will be created near the numbers of 205.76. This is where we're looking for the break, the retest, and then price probably will be in that zone by then, and maybe just be a bullish green candle, but we are looking for that price to break up. So where we are with price action, we do know we received a break. So as we walk down the time frame, we're looking for the retest to see if that market's going to push up further, and let's see if we see that. Daily time frame, price action still receiving the break. We don't see a retest yet. We still waiting for that market to see if it's going to follow up with a retest. On this daily time frame, grabbing the second to last candle in the market, which would be that bullish green candle, spike up to the high, and we're going to put a zone around that area. So as we walk down the time frame, we can take a look at what happened. Headed down to the 4-hour time frame. So on the 4-hour time frame, still receiving the break of the zone. So market broke the zone from that daily time frame. 3-hour time frame, so side by side. So price action is reading as a bullish green doji. Is a weak candle, so it's side by side with the second. So what it's reading as market pushed up, retested the second last candle, retested third last candle, second last candle pushed up and just basically consolidated sideways. So we're going to see if market is going to break above this resistance line. That will be near the numbers of 188.93. Is going to push up above that, or is going to work his way back down to come back for a full retest. Walking down to the 2, same candle. Walking down to the 1, same candle. So we can see that as we walk down the time frame, the market's having a hard time breaking the second to last candle in the market. So price in second is consolidating, or price is consolidating in the second to last candle, which price action is retesting the midpoint of that second last candle. So there's a break. The retest is in there. We're going to see if it's going to push up, consolidate sideways, but whatever's going to happen, you're looking for price to engulf the second to last candle to push that market up or push that market down. While we're doing that, let's just walk down the time frame to see what's going on. Still at this, see how everything is still side by side consolidating. And now we're trying to see that market's trying to create some support for that market to see if it's going to push up or drop down. Okay, guys, this is Cam Jones, FX, TSLA, Stock.